Are you wondering if you've already missed the boat on AI stocks? Or maybe you're asking yourself if there's still time to capitalize on the explosive growth in the semiconductor market? In today's video, we'll delve into the best semiconductor stocks that are still poised to deliver incredible returns, even as the market heats up. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Semiconductor stocks have been on a tear lately, with their valuations soaring, largely thanks to the surge in demand for artificial intelligence technology. One of the key catalysts behind this surge is the rise of AI technologies like ChatGPT. These technologies rely heavily on advanced semiconductor chips, driving up demand across industries from automotive to industrial applications. While the semiconductor market, represented by the Morningstar Global Semiconductors Index, has seen an impressive rise of over 53% in 2024 alone, there are still undervalued gems for savvy investors to uncover. Let's start with a semiconductor giant that continues to dominate the market. Taiwan Semiconductor Manufacturing Company, TSMC, ticker TSM. TSMC is at the heart of the AI revolution and its role as a leader in cutting-edge contract manufacturing positions it as one of the most attractive investment opportunities today. TSMC boasts a wide economic moat, which means it has significant competitive advantages that allow it to maintain profitability over the long term. One of these advantages is its dominant position in AI chip production. To trade TSMC, watch the 50-day and 200-day exponential moving averages, EMAs. If the 50-day crosses above the 200-day, that's a golden cross, a bullish sign. If it drops below, it's a death cross, indicating a bearish trend. But how do we know when TSMC is overbought or oversold? That's where the relative strength index comes in. RSI ranges between 0 and 100, and typically when it crosses above 70, the stock is considered overbought and may face a correction. If the RSI falls below 30, the stock is oversold, signaling a possible buying opportunity. Keep an eye on these levels to better time your entry and exit points. Also, check out the moving average convergence divergence indicator. When the MACD line crosses above the signal line, it suggests upward momentum. Below means a potential downturn. These tools give you a quick sense of TSMC's momentum. TSMC is like the secret sauce in the tech industry, powering cloud and edge AI with high-performance chips that keep everything running smoothly. Companies worldwide rely on TSMC for efficient semiconductors, just like people depend on coffee to power through Monday mornings. To expand its reach, TSMC is building new facilities in the US, Japan, and Germany, which helps reduce geopolitical risks and diversify manufacturing, kind of like adding more flavors to your ice cream sundae to avoid that one friend who only wants plain vanilla. While these expansions are pricey, government subsidies and customer demand for secure supply chains help offset the costs, especially with geopolitical tensions simmering like a pot of overcooked pasta. TSMC's growth prospects are as promising as the next season of your favorite binge-worthy show, thanks to the increasing demand for chips as AI expands. However, its capital expenditures might feel like a roller coaster ride, impacting short-term profitability and leading to some ups and downs. Plus, competition from other global foundries could heat up like a spicy pepper as countries ramp up investments in their semiconductor industries. But before we proceed, here's a question for you. What's the one stock in the semiconductor space that you think will dominate the next decade? Comment your thoughts below. Let's now turn our attention to another semiconductor stock worth considering. Global Wafers, ticker 6488. Unlike TSMC, Global Wafers operates in a more niche area of the semiconductor industry, producing silicon wafers that are used as the foundation for all semiconductor devices. Global Wafers may not be a household name like TSMC, but its strategic investments and cost management have positioned it as a leader in the US market. When analyzing Global Wafers, the same technical indicators can be used. The 50-day and 200-day EMAs will help track long and short-term trends, and the RSI will tell you if the stock is approaching overbought or oversold levels. You can also use MACD to gauge momentum and Bollinger Bands to identify potential breakouts or corrections. These tools can be powerful when combined, giving you a comprehensive picture of Global Wafers movement. One of the most attractive aspects of Global Wafers is its 300mm wafer plant in Texas, the only facility in the US capable of producing wafers for cutting-edge semiconductor processes. It's like the lone bakery in town that makes the best cookies. No competition for at least 4 to 5 years. The demand for silicon wafers is set to grow alongside the booming semiconductor market, driven by electric vehicles, industrial automation, and non-AI applications. Think of it as everyone suddenly wanting to drive electric scooters instead of bikes. Global Wafers is well positioned to capitalize on these trends, thanks to its strong cost control measures that help it navigate rising labor and energy costs better than many competitors. From an investment perspective, Global Wafers offers a promising mix of growth potential and value. The stock is currently trading at 16 times its estimated 2025 earnings, which is like finding a hidden gem in a thrift store, undervalued but full of potential. As semiconductor market sentiment rebounds, Global Wafers is poised to benefit from the surge in demand for silicon wafers. However, it's not all smooth sailing. Global Wafers' performance is closely tied to the broader semiconductor cycle. When chip demand takes a nap, so does wafer demand. And while the company enjoys a monopoly now, the semiconductor industry is as competitive as a reality TV show where new players could pop up and start vying for market share. When considering semiconductor stocks like TSMC and Global Wafers, it's crucial to keep in mind the cyclical nature of the industry. The semiconductor market has always been driven by periods of high demand, followed by downturns. Even with the AI boom, companies in this space are still subject to fluctuations in demand based on broader economic conditions and advancements in technology. However, one of the key advantages that both TSMC and Global Wafers have is their economic moats. TSMC's wide moat is built on its dominance in AI chip manufacturing, while Global Wafers benefits from its narrow moat due to its unique positioning in the US wafer market. These moats provide a layer of protection against competition and allow both companies to maintain strong gross margins even during downturns in the semiconductor cycle. As we wrap up, let's quickly break down the numbers from the chart. Taiwan Semiconductor. Manufacturing is trading at $174.08 with a market cap of $791.44 billion, offering a solid dividend yield of 1.6% and an EPS of $5.59. The one-year price target sits at $209.84, implying a potential 19.74% upside, making it an attractive option for investors seeking both growth and income. Meanwhile, CrowdStrike, priced at $464, boasts a market cap of $220.21 billion and a standout dividend yield of 4.09%. With an EPS of $37.05 and a price target of $556, it offers nearly a 20% potential gain. Whether you're looking for AI-driven growth or a solid tech play, these semiconductor stocks offer a lot of potential upside for the savvy investor. In conclusion, semiconductor stocks present an exciting opportunity for investors, especially as AI continues to drive demand for advanced chips. TSMC stands out as a leader in cutting-edge manufacturing, with strong growth prospects fueled by its role in the AI revolution. Meanwhile, Global Wafers offers a more niche opportunity, with its monopoly in the US wafer market providing a unique value proposition. Before we wrap up, here's something to think about. If you could only invest in one sector for the next 5 years, would it be semiconductors or something else? Let us know in the comments. Thanks for watching today's video on semiconductor stocks, and don't forget to like and subscribe for more insightful content on investing and financial growth. Remember, this video is for informational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Until next time, stay informed, stay invested, and keep growing your wealth with simple investing secrets.